Hello, passive investors. Welcome to Passive Pockets, presented by Equity Trust. I'm your host, Jim Pfeiffer. A critical part of investing is knowing who you're investing in. So today, we're going to meet Don Wenner from DLP Capital. Let's get into it. Don, welcome, and thank you so much for all the support you've given the Passive Pockets community.
Thank you, Jim. Pleasure to be here.
And just to start, can you tell us a little bit about DLP, what type of real estate you focus on, and kind of what you guys do?
Yeah, I'd love to. So DLP Capital is headquartered in St. Augustine, Florida. Our purpose is to transform lives through the building of thriving communities. And what we're centered in is housing that's affordable for working families. So people call that workforce housing. They call that essential housing. But that's what we invest in. We develop, build, operate housing communities, and then we lend capital and partner with other developers, builders, operators, investing in housing that's affordable for working families.
I think that's fantastic to be in real estate and have kind of a mission that's above and beyond just making money. Can you talk a little bit about how that came to be? Why did you decide that was the route you wanted to go?
I started the organization in 2006 in Bethlehem, Pennsylvania, and I was a college student at the time. I had, the resources of a college student who had moved out of his parents' house in high school. And for the first, number of years, from 2006 to 2014, I'd be telling you a fib if I told you that back in 2006 that purpose to transform lives through the building of thriving communities was clear in my mind at that time. October 2006 is when I entered real estate. That was the peak of the real estate market. And really for the first 8 years, it was just solving one person's problem after another, right? People were struggling. Home values were going down. A lot of people were upside down on their houses. There was a lot of distress. And we just literally came and helped person after person. Sometimes we bought people's homes individually. We helped them sell homes as a real estate agent. We negotiated short sales all over the country. We would just help people rent homes when they couldn't qualify to buy anymore. But it was just one person at a time solving their problems. And I grew the business out of fear, to be candid, the first 8 years, just fear of failure. My dad started working for me a year into my career. My mom started working for me about 6 months into my career. My stepfather came to work for me a few years later. My stepmother came to work for me around that same time. My dad's now at 17 years. My mom's retired from the company. My stepfather's at 12 years. My stepmom, I think, at 11 years. And it was fear, of my ego not being able to handle it, fear of running out of money, and grew and hit a point in, I'd say, 2012 or so, when I realized I'd created enough wealth, we had enough security, we had enough cash flow that I could really start taking time to listen to the Lord, start taking time to read and study. And I read every book on purpose and meaning and calling and spent a lot of time in prayer. And finally, by about 2014 is when I got clear on what I've been called to do, which is to transform lives through the building of thriving communities. And that's when we started investing in whole communities. And that's when we moved to buying large-scale multifamily communities, soon after developing brand new ones. And also when we started providing capital to other sponsors. So that's been our journey now for the past 11 years. And all of our funds are impact funds. So they're mandated that we provide housing that's affordable for working families, which means our rents are less than 30% of their income. And that's actually part of how we generate the returns we generate. We don't expect our investors to take lower returns because we're doing good. We actually know that's part of how we increase the returns through our strategy of providing housing that's affordable for working families.
That's good stuff. So it's incredible to me that you started this while you were in college. So can you tell me, how did you figure out real estate was something you were interested in, and how did you get into it, so young? I wish I had known about it back then, but it took me 30 years after college to figure things out.
I've often said, I stumbled into it. It wasn't, by design, but, I think about it, is most things we don't realize too much later was ultimately part of a bigger plan that I wasn't in control of. And so I knew from the 8th grade, so I grew up, limited finances, and that my parents were 16 when they had me. I'm the oldest of 5. My mom ran a home daycare. My dad was a correction officer, divorced when I was young. And so we had very limited financial means. My verse in my life is, to whom much is given, much is required, and been incredibly blessed. Family, a lot of love, big family, raised in the church, et cetera, but limited financial means. And my mom, having me at 16 years old, was very terrified that I'd go down that same path, and had a lot of rules and structure that, as an entrepreneur who knows everything, we think, I couldn't handle the controls. And I actually moved out of my parents' house at 17. a junior in high school, and waited tables to get through high school. But I had already known what I was going to do. In eighth grade, career day in eighth grade, a financial advisor came in. He showed this little laminated chart that showed that financial advisors made more money than doctors, lawyers, accountants, all the jobs your parents tell you to want to do, right? So I knew that's what I was going to do. I felt I still should get a college degree. So I was blessed that, I decided to go to college and went to Drexel, got nearly a full ride to Drexel, worked at some cool companies and doing, tax type work, doing financial analysis type work, big accounting, big financial firms, but knowing I was going to be an independent advisor. I would still wait tables on the weekends to help pay for bills while I was in college. And a guy kept coming into the restaurant I worked at, which at the time was a Texas Roadhouse, which if you've ever been to Texas Roadhouse, yes, I had to line dance. It was an interesting place. And the guy kept coming into the restaurant. And if you ever worked in a restaurant, they'll do things like, hey, whoever sells the most, ribeyes tonight gets a $50 reward, things like that. So whatever the incentive was, that's what I was going to sell. I was going to win that incentive. And so this gentleman who kept coming in was a sales guy, and he recognized that I was trying to sell him on something. And so one day he finally convinced me after his third or fourth time of me waiting on him to come meet with him. And I did. And he was in the ADT security business. And he convinced me if I came to work for him, I'd make $2,000 a week. And at 19, it sounded really good. So I believed it. And my job was to knock on doors, selling alarm systems door to door in residential neighborhoods. And I was, really successful at that, not because I was particularly good, but because I just knocked on a lot of doors. One day on a Friday, I'd come to his house like every other Friday, and he'd, write me a handwritten check out for my commissions for the past 2 weeks. And one day I'm at his house and he has a $16,000 check on his table and a $17,000 check on his table. And I was, I became the number one sales rep in America for ADT. I was making $6,000 to $8,000 every 2 weeks. But I see these big $15,000, $16,000 checks and I said, well, what is that all about? And he said, that's my real estate company. He was a real estate agent. This is 2005, 2006. And he said, you should get your real estate license. If you can sell alarm systems knocking on doors, you'll do great in real estate. So for whatever reason, I believed him. And before that moment, I never once in my life thought about real estate. So today we hire analysts and interns right in college who are going to school studying real estate. That's what they know they want to do. I had no idea. I took my classes online. I didn't sleep for a couple weeks, barely an exaggeration. 2 weeks later, I took my exam. I flew to an event to learn marketing, and I walked out with a marketing message: your home sold guaranteed or I'll buy it. And that was October 2006. And I just pounded the pavement and it just took off really, really quickly. But I never thought about getting into real estate before that moment.
That's an incredible story. I love it. My experience is that, especially in real estate, but in other things too, that failure is kind of the best lesson, right? Sometimes it's expensive lessons, but it's a great lesson. So can you talk about maybe something that you've learned in real estate or otherwise that, a failure kind of showed you the light?
I'll mention, and I'm actually sitting in an office in Greenville, South Carolina, in a wealth management company's offices. This isn't even my office, but they have my books sitting behind me. And I wrote a couple books. One's called Building an Elite Organization. One's called Building an Elite Career. And the books are on, the subtitle of that book behind me is The Blueprint to Scaling a High Growth, High Profit Business. And it's kind of a framework. If anybody listening has ever heard of EOS or the book Traction, similar to that. The first person who read that book was Gino Wickman, the author of EOS and the book Traction. And so we've built this really systematic approach to scaling our organization, and just found out we're the Inc. 5000 fastest growing company list for the 13th year in a row. And so I say that to say, we've been very blessed that our story of growth has been like this. I mean, we've grown by roughly 50% in revenue growth every year for 19 years in a row. We've never had a year we've gone backwards. We really haven't had a quarter we've gone backwards. And so when people see that, it looks, perfect, right? It looks like we've got this little, literal track record of going like this. And when it comes to the most important things to me, like hitting investor return expectations, it has been perfect, flawless. But that doesn't mean we're not failing all the time internally, right? I always think of like the duck gliding across the water. It looks so smooth and so calm, but underneath the feet are going so fast, right? And we've had a lot of those times. And I'd say one of the things that's been, great success for us, but also where some of our greatest failures have been around the quote I often say: business would be so easy if it wasn't for the people. And that's a terrible, terrible quote, but it drives the main message. That's the hard stuff, is hiring, developing leadership, putting the right people in your organization. And we were not afraid from very early on to hire and grow. And I've always been trying to hire ahead. But sometimes when you're moving really fast, as we have, you'll hire the wrong person, you hire too fast. And we've had times earlier in our story where we've allowed somebody who's not a cultural fit. I'll just call it, we've allowed a couple a-holes is a word. We allow no a-holes at DLP today, but in the past we have made that mistake a couple times. And somebody who can be highly productive and add value to the organization, but is not a cultural fit, is not adding value to their colleagues, is not somebody I trust their integrity. And we had a person like that we had allowed in the organization, and he was in the organization for about 3 years and should have parted ways after 3 months and didn't, and ended up paying the price of him making some decisions we didn't appreciate. And then after leaving, having to deal with some headaches and trying to make as much noise as he could. And the real lesson, I paid a significant price to get this person out of my company, but the real price was the damage that it did to my colleagues and allowing the wrong person in the organization. So I'd say, that's the mistake. And whether that's with our clients, an investor, or somebody we lend our capital partner with, or an employee in the organization, doing business with people who don't have the same values and who we can't fully trust their integrity and their intent has been where most of the biggest mistakes we've made have ultimately, when we point back to what was the real issue underneath the issue, it was investing in the wrong person.
Yeah, I think that's great insight, because I think even, as an investor, when I look for someone to invest with, an operator, that's one of the things that I'm focusing on now too, is I want to make sure it's somebody that I not only know and trust, but also like, because that changes everything. Because, I'm going to be in business with this person for 5-10 years. So having a relationship makes sense, and a cultural fit also. And that goes for your employees, your investors, suppliers, vendors, everything. So I think that's a fantastic lesson learned there. I want to switch now to financial freedom. And that's what Passive Pockets is really about. And I know that's what a lot of your investors are searching for too, financial freedom, whatever that means to them. So can you talk about what financial freedom is to you and how you look at it for you and your investors as well?
Yeah, I'd love to. And we're blessed today that we have about 3,500 families invested with us. The backgrounds and age and so forth range, and but most common, they're people within 10 years, quote unquote, of retirement, or post, retirement within 10 years. And I think for everyone, whether they're an entrepreneur running a very successful business, busy professional in a career as a dentist or a doctor or whatever the case may be, or somebody now retired, I think every one of those situations, people want to have a flow of passive income that they can count on, that can allow them, if they're an entrepreneur, to take big risks because they know their family is going to still be well taken care of, and their needs are going to be met, and their children's colleges are going to be taken care of. Or if they're a professional, knowing that they're going to be in a position that one day they can actually retire, or knowing that if they get hit by the proverbial ice cream truck, their wife and their kids and so forth are going to, still be taken care of. So I think, almost all of our investors have that same desire to have that peace of mind, that they have a steady, consistent cash flow that they can count on, that can give them the freedom to pursue their passions, to pursue and support the ministries that they want to be a part of. So, and maybe that changes nothing in their day-to-day today, but it gives them the freedom to know that they're working by choice, not by necessity. So that's really what our approach has been in our investment funds, is we want to deliver to people when they invest with us, they're not having to worry about their principal. They know they're going to get their principal back. They know they're going to have access to liquidity if they need it. And then they know that they're going to be able to count on the return targets that we set, and that they're going to be able to have steady, consistent income. And if they're at a stage of life where they want distributions, steady, consistent distributions. And that's what we really focus on delivering. And we're blessed that we've generated double-digit returns in all of our funds with regular monthly distributions across all funds. Never missed a preferred return, never lost $1 of investor money. And I think it's important that the returns, we've done that in the actual performance. But we find one of the biggest ways that we give that peace of mind and that financial freedom is through kind of what we were just talking about, them having a deep level of trust in not just me, but our management team, and us trying to help our investors to understand that finances is only one form of capital that really matters. And so, example, we just got done this past weekend doing a 4-day event called our Extraordinary Family Event, where we had 700 of our investors and their kids there, pouring into them, helping them avoid the shirt sleeves to shirt sleeves crisis in 3 years, and investing in the purpose and values and meaning of the wealth to really make sure that money doesn't get lost due to their kids not being equipped or having alignment on the meaning and value of that wealth.
Wow, that's fantastic. So last question for you. You just met with 700 investors, so I'm sure you've had these discussions, but when you're thinking about your investors or any passive investors in syndications, what is something that they should learn or do to maximize their success in this unique type of investing?
So I will first just kind of side answer say we don't do any syndications in the sense of at least what most people think of a syndication, that you're investing in a specific deal or asset. For us, we run evergreen private REITs, investment funds. So each of our funds owns lots of assets, lots of diversification, and all forms of diversification. So it's a very different model, has liquidity. You're not tied into the specific timetable of a deal or my choice. You have your own set of liquidity. So it's a very different model that we think reduces risk a lot, because if I'm invested in 50 deals in one fund, I'm going to have a dud. I'm going to have a deal that doesn't go well. I'm going to have a deal that's a home run. But the diversification balance things out. But I would say if you do choose, and there's reasons, you come across a great sponsor, a great deal, a reason you believe in a specific deal. What I think is important, kind of we were just talking about, knowing the sponsor. So people think, I'm the CEO, I'm the founder, I'm the fund manager. So people believing in me and having a deep level of trust in the CEO, in the sponsor, is of course really important. But I think one of the biggest ways to mitigate risk and build confidence is get to know the people behind the CEO. And what I find is most syndicators, most real estate guys, you have one dynamic CEO, and then you have a bunch of followers. Jim Collins is somebody I'm a big fan of and a mentor of mine, and he says, most leaders are time tellers when what we need to be is clock builders. So time tellers means that CEO is the only person who knows the time, the only person who can make a decision, the only person who can guide your investment. Without him, nothing happens, or her, right? A clock builder is somebody who develops leaders who can make decisions themselves. And that's really important. If that syndicator is having success and now they have more than one asset and they're growing and they've got construction going on and property management going on and multiple investments going on, there needs to be other people making decisions, other people who can give you clear answers, other people who know what they're doing than just the CEO. So I think getting to know the team. So anytime we even make a loan, a senior secured first position mortgage loan to a developer, builder, operator, which is our biggest side of how we deploy money, I'm personally and our leadership team going and meeting not only the CEO, but I'm meeting their leadership team. I'm flying out to their market. I'm going and touring their properties. I'm making sure I trust the people behind the CEO just as much as I trust the CEO.
That's great stuff. We really appreciate you. Again, that wraps up this interview with Don Wenner from DLP. Be sure to check out our YouTube channel and subscribe to our podcast for great insights into the world of real estate investing and syndications. Again, thanks for tuning in. And as always, happy investing.